Hello and greetings. Today is December 27, and in this video, I'm going to share with you what's really going on in the market. I know it's been holiday, so I am so excited that even during the holiday, I get an opportunity to make money. Uh, but the highlight of the day is I'm just going to deviate from our usual podcast. My colleague, Coach Blooming, is taking some time off, so I'm going to be alone today. But I'm going to just walk you through, about the trends, what's going on in the equities market and in the financial markets as well in general. And then I will share with you what I think and also show you some movements in the market that I am going to be paying attention to, and also conclude by sharing with you some economic data. Now, for those who don't know me, my name is Isaac Jonas, and I am a trained economist, but I'm so passionate about the market. So I trade in the markets, but I'm big on equities. I like to also invest and hold high quality companies when I find them at a discount for the long term. So overall, this year for me has been exciting because I saw the portfolio going up. Even today, as I'm talking to you, I managed to cash out some money on a position that I took yesterday, and I'm going to talk more about that in a second. Now, what is going on in the market? For those who watched the latest video that I did yesterday about my market outlook, this is something that I also mentioned and even cautioned viewers to say, look, the way the US equities market rallied this year, and when I mean equities market, I mean like the S&P 500 stocks, right? That are publicly listed in this case. There has to be a time when people take profits, because if the market, like in that case, the S&P 500 did rallied down up 26% thereabout year to date, what happens is that there are a lot of people who are sitting on a lot of profit. And for me, if I am trading, I like to take money off the table. But if I'm holding for the long term, then of course, I'm just going to keep on holding. But to my surprise today, I remember yesterday I took a position on the VIX, right? Because I saw that it retraced it to $3, even to $2.95. And I loaded up. And today, when I woke up, actually, my uncle, Aaron, actually called me. We traded together. And I saw the missed call. And then I woke up. I was really tired. And then he sent me a message and says, "Hey, VIX has spiked up. So I'm going to be exiting my position." Usually we have those kind of conversations uh, early in the morning. And yeah, I woke up and I sat on the desk, and I saw a nice profit. And the portfolio was up almost like 3% on the position that I took. So I took the profits. I put in a trailing stop loss, and then that was it. And I'm going to walk you more about how that trade took place. But that's beside the point. Trading is really something that requires skill. And I always caution people to say, when you're investing or trading, the most important thing for you is to, first of all, educate yourself. Don't just jump in just because someone said, okay, I made X amount and stuff like that, right? Because there's a lot of work, a lot of research that comes into this. And for me, what I've seen in particular this year in my trading, uh, strategy is that it is very, very important to have uh, an emergency fund. That means 6 to 12 months worth of living expenses, money that is just sitting in an account that is easily accessible. Why? Because if I have that, I don't have to worry about the basic bills, right? You have car insurances, you have, food, you have, bills, rents, or mortgages. So I don't want to be making trading or investment decisions based on the short term. I have switched my mindset to be thinking about the long term. So if I take in a position specifically, I want to get in and get out if I'm trading, but sometimes some positions just require time. And that brings me to another point to say, look, I think to be profitable trader, you really understand, you have to understand the market, but more importantly, you need a bit of capital. Because if I am looking at, for me, if I had my way, like I like to trade with like 20,000, 30,000 US dollar positions. And what then happens is that if a trade really moves according to my the probability that I will have calculated to say, I think this is going to go this way, right? If it does go that way, if that trade gets profitable, let's say you make 3,000 or maybe 4,000 US dollars, that's decent money, right? But the thing is, at the end of the day, there are some times where you just have to take some losses, right? But because if you have a big portfolio, if the stock or the security that you are trading moves up or moves in a direction that you will have anticipated, let's say by 2-3%. Let's say I'm trading with 100,000, that's a $3,000 position. For me, that's okay because I don't want to be aggressive and take a lot of unnecessary risk just because I want to pay bills or I want to make profit. Because I've seen that it is very, very important to have a hedged portfolio. Because what I then did when I made money, I opened a position in the equities position. I averaged down the equities position, the ETFs that I hold. So I took the profits, I reinvested when the market is down. It's simple. And that has been something that has been working for me because at the end of the day, I'm looking at the long term. Now, this is what I can see on the market, and I'll show you live in a second. You can see that the Dow Jones is is down 0.78%, and the Nasdaq almost 1.6, and the S&P 500. I saw at some point it went down even more than 1.5%. And I'm going to do a bit of technical analysis on that. But what is interesting here, gold also is down today. This is why sometimes I say there are some nuances in the market. And really, the reason why people are selling off, it could be sometimes people are taking some profits, or maybe there are some big funds that may be just closing some positions, mostly to maybe do some tax harvesting, like to just close some loss-making positions so that they can benefit from some writing that off on taxes. Now, you will see that the VIX is up, right? And I trade the VIX through ETFs. Like this one, you see, it went up. So that means if you had 10,000 shares, right? That means you'll have made $2,600 in this move if you had gotten in. But the issue is you really have to understand how this moves, because that's how I make money, to say, look, I understand that a lot of people, they panic each time that they see sometimes there's a sell-off in the market, and I am capitalizing on human behavior, and I just trade the volatility, the fear. That's just one trade, one particular trade that I take, but I take quite several because I follow some stocks like Nvidia, and I like to trade leveraged ETFs. So you will see that Tesla is down. Most of the big stocks, tech stocks, is down almost 1.5%. Tesla is down 5%. Now, Nvidia is down almost 2.6%. But you will see that here, I like to track quite a number of stocks. And these are just some, and I'm not saying you should trade or invest in these stocks. These are the stocks that I follow and I understand, right? So this is what is happening in the market. Now, I also like to understand what's going on the bonds market as well. So I like to follow this TLT. Today it's down, even though the market is down. So you will see that here. I also have several leveraged ETF, and I also ETFs, exchange traded funds, that are funds that track some index funds. You see SPY, it tracks SPX, right? So this is how I have exposure to the S&P 500. I just buy this as an example. There are quite a number of them, and I look at fees. I've done some videos. Now, I would like to, first of all, go on the chart to do a bit of, to show you what's really going on in the market, right? So let's see here if you can this. I have to exit this, right? Okay, good. Now, this is the S&P 500, the S&P 500 index. You can see that this chart is for today. You can see that now it has recovered slightly, and this is what usually happens in the market. This is the screenshot that I was just showing you. So you can see here that now this is when the market closed yesterday, right? It closed at this point, right? So I like to say, look, at this point, this is the supply zone. In other words, that's where most, it's a zone where if this particular stock, or in this case, security, but this is the index, right? I'm just analyzing the index, not the ETF like SPY, which I can trade, right? But it's the same, they mirror the same, but I'm just looking at the S&P 500 index. Why? Because index, that's what the ETFs track. So, like I said, this is the supply zone. So today, what happened is that the price dropped when the market opened. You know, this was the huge price drop. So you can see that this percentage alone, right, it was a huge drop. So even after this, when the market opened here, there was this huge bearish candle here. You can see here that this chart is for 15 minutes, right? So this is what transpired in 15 minutes. Now, what happened is that the market dropped, right? And usually what happens is sellers are in control, and then that's why this market drops. And then buyers wanted to kind of come in control. And you can see that this is an inverted hammer, and then I have this bearish candle, and then I see this doji. This doji is, it shows you that there's indecision in the market, buyers and sellers. There's a tug of war, but there's really, none of them is really in control. So each time that I am in a trade and I see a a doji, right? There are three types of them, right? And I explain a bit on the course that I have on my website at www.streetwiseeconomics. So what then happened is the market continued to drop, which I think is a normal correction. Now, when it came to this level, so this is what I would call the demand zone, right? Because you see that this ETF, this index, when it came to this level, right? And I will explain a bit in that. So this is the demand zone. What happens is that there are buyers and sellers in a market. That's how, in simple terms. So the buyers, those are those who will be buying and hence bidding the price up. Let's say they are putting a market price, there's an order, like I can put a limit order to say I want this order to be executed at this specific price. I'm talking about if you are trading the ETF, you can't really buy the index. At least for me as a retail trader or investor, I buy ETFs. But it's the same principle, right? I keep on referring to that because a lot of times people ask me that question. Now, you see that here there was also some resistance. You can see that there's a doji here, right? I think it's a gravestone doji, right? You can see here there was some resistance here, right? So you can see that there was a demand zone here, right? But because there was a resistance, it went down. Now, let's see where this is coming from. You can see here that if I look at the price action in the past, you can see that there was a demand zone here. The market really dropped to this level, right? This is what we call technical analysis, right? Basically, nobody can really predict where the market is going to go specifically, but these are some resistance levels, because what happens is that there may be some big institutions, let's say, that have a big order position. Let's say they are shorting the market or they are going long, right? So let's say they are betting that it's going to go up, but then if it comes to this level, kick me out. So usually those are some of the things that can really move the market. So now you can see this is what's transpiring in 15 minutes, right? So you can see that there was some resistance level here, right? You can see here at this level, right? So now the market is going back up, and you can see that the VIX, right, is already starting to drop. That's how I make money, as an example. You can see that also some of the stocks that were really going up, going down, now that they may be retracing. Let's take Tesla, for example, right? This is what happened to Tesla. It closed at this level, right? This was pre-market. So this was post-market. So it closed at this level yesterday, right? So this was the supply zone from yesterday, right? Supply zone, basically, sellers are in control, right? So you see that post-market, it dropped a little bit, but pre-market, because what happens is before the market, there you can open a position, but usually it's very, very tricky. Imagine if you had gotten in at this point, you gotten in if you wanted to trade before the market opened, right? Because the market opens at 6:30, and you got in here, right? Let's say at this point, what happens is, now when the market opens, because I like to see what happens, because people then see if there's data that is dropped or there's some news that comes in. So I want to process. So there's a difference between day trading and swing trading. I like to swing trade the VIX and also other stocks. In other words, I buy and I hold for at least a day. Now, if I'm day trading, that means I just get in and get out the same day, within the same day. So you see that Tesla, it really dropped from this level, and then it came to this level. So you can see right now that it came to this level, right? You can see here that it's on a downward trend. You can see here, let's say, you can see here that it really went down to around this level, right? But then it then started to go up. So if you were to trace this, you will see that usually there is a resistance level. You can see here that there is a demand zone here. So that's why this price, usually there is that resistance, because usually there are some order blocks that are there. So that's how the price action works, because you can see now that at this level, you can see now here that this is happening each time that it comes here. If there's a big order block, let's say 100 million, shares, it then bounces, it can move the market. Now, why am I sharing this? When I am trading or investing, I like to use both fundamental and technical analysis. And when I am investing, that means I do a deep dive into a stock. I look at their finances, I understand the fundamentals, and then try to make my judgment to say, is this valuation at a level that I would consider below the intrinsic value, that is the fair value, right? Because the stocks tend to go to, if they are overvalued, they tend to revert back to come back to the mean, or even sometimes down, because usually people overreact. Now, in conclusion, in the coming week, I expect people to be selling. And because of the economic data that will be coming in on Monday and Thursday, there's going to be some economic data. So that can be something that can potentially move the market. So do I know what's going to happen? I really don't know. But what I do as a trader, I like to look at opportunities. Like if the market drops to certain levels that I'm comfortable with, specifically on securities that I trade, that's when I get in and I get out at predetermined levels. And when I'm investing for the long term. I'm basically dollar cost averaging. And then I just buy and hold for the long term, because timing the market beats trying to time the market. And I only do so, like I've always said here, on things that I understand, like core positions on exchange traded funds that track the S&P 500, the Nasdaq, and individual stocks that are really, really great in terms of their revenue, their management. Now, if you'd like to have a conversation, let's say if you are planning on starting to invest or trade next year, feel free to drop me a message on www.streetwiseeconomics.com. You will see an option to book a one-on-one time. I hope you found this market insights helpful, and please make sure that you understand that investing and trading comes with some risks. So make sure you trade and or invest wisely. Bye bye for now, and I will see you, or I will talk to you guys in the next episode. But if you have any comments, be sure to put them on the comment section below. Bye bye again. Thank you.